Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our market research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, everybody, welcome back to another week in the crypto market. It has been quite the busy one, even just on the macro front. Today, the Federal Reserve decided to hold rates steady in their meeting. The CFTC and SEC yesterday issued a joint statement, which actually is really interesting. So basically, while the statement isn't hard rulemaking just yet, it is specifically some guidelines on how maybe federal laws can apply to crypto. And they promised a more clear taxonomy. They also gave a taxonomy for things like digital collectibles, digital commodities. And they basically said, we're going to create an actual framework that allows for non-security type assets to be included in this. They also clarified that protocols with like mining, staking, airdrops doesn't automatically make the protocol a secure or make the token a security. So some really cool updates. Love to see this. The other big piece of news was that MasterCard acquired the stablecoin infrastructure company BVNK for $1.8 billion this week. So like I said, a lot of things happening on the macro front, but as always, we are here to talk about the tokens. So we will get right in. So first, I'm actually going to talk about Stacks. So yesterday, Stacks, which is a Bitcoin Layer 2 project, activated their SIP 034 upgrade on mainnet. And this is designed to essentially significantly increase speeds and capacity on the network. So the upgrade is really geared towards increasing the number of transactions per block, which would essentially speed up a lot of some DeFi applications by 30x, according to the project. So it won't be for every project, but for the ones that really need a lot of high speed, that kind of require that large amount of throughput, that is what this update will target. So just if you're not really familiar with Stacks or Bitcoin as a blockchain outside of just Bitcoin, the store of value, Bitcoin doesn't allow for smart contracts on the native layer necessarily. And so as a result, we've seen Stacks, which is one of the oldest, or it is the oldest Bitcoin layer 2 and first projects kind of build or pioneer this space. But they don't have any, Bitcoin doesn't have any applications on it natively. And so Stacks and these other L2 projects have essentially proliferated to like offer these more advanced use cases. So Stack specifically has focused on yield generation for Bitcoin and done so through a number of DeFi applications. The STX token, though, it is down 1.7% for the week. Okay, next we're going to talk about Lido. So Lido, which is the largest liquid staking provider on ETH, they announced this past week the launch of various stablecoin and ETH earn vaults. So this is a bit of a departure from the protocol's core business of staking. They are really going to allocate kind of the assets that are deposited to these earn vaults aren't just necessarily going to staking ETH on mainnet, which is kind of, like I said, Lido's core business. They're also looking at kind of offering a blend. They said it's going to be a blend of conservative lending positions with selective exposure to higher yielding strategies to earn returns. So we're definitely seeing this across the space where, especially because like the Ethereum, the rewards you earn from staking on Ethereum mainnet are so low right now. You can earn higher yields in other parts of DeFi. So right now their vaults are around 5%, 5.5% for some of the strategies, but they obviously are more risk taking than just simply staking on ETH mainnet. As I mentioned, like I said, this is a bit of a departure from what they've previously done, which is just offered liquid staking. And so they introduced some of these vaults in a bit of a limited capacity last September. Reportedly, they attracted $250 million in deposits. So that is why they chose to kind of open these up more broadly. Since launching these vaults this past week, they have attracted $217 million in deposit. However, Lido token is up 40 basis points for the week. Okay, next I'm going to talk about DoubleZero. This is kind of a new project I don't think I've touched on before. So DoubleZero is actually an infrastructure project that kind of focus on You can think of it as providing wired networks for the Solana blockchain to run on. So like kind of rather than using like the traditional internet rails, which can cause congestion and kind of certain slowness in transactions, DoubleZero essentially lays its own internet, if you can think of it, for Solana to run on. So this past week, what's DoubleZero introduced like a new product, which is called Edge. And essentially it allows anybody who pays a subscription fee to see the contents of transactions before they're confirmed. So why is this important? A lot of people ask these questions. So technically for Solana, if you want to see these, like, if you want to see the contents of blocks before they're published, you have to be a really large validator and staking a lot of assets. But that also means that it basically means that people who are wealthier, or the groups that are wealthier, can see those transactions. What does that mean? That means that if you can see transactions before they're published and how they're ordered in the block, that can allow you to make certain financial trades or decisions around those transactions. I've talked about this before. It's kind of called, in the digital asset space, we refer to it as MEV, which stands for maximum extractable value. And again, it's just the idea that you can make money based on the ordering of transactions on blockchain. You can make money on the ordering of certain transactions within a blockchain's block. So in DoubleZero's case, they're essentially kind of democratizing access to that. So instead of like, okay, only people with giant stakes are able to see it, now folks who subscribe to this DoubleZero service called Edge can also see it. So the other big change they made is that they also removed a 5% fee that validators had to pay to DoubleZero, which essentially increases. And then they also increased staking rewards to validators that are kind of like in underserved areas or areas where they don't have a lot of coverage, to increase that coverage. Finally, they also granted a revenue sharing. They're granting revenue shared groups such as Lido, Agave, and others that provide what are kind of considered vital Solana infrastructure pieces. And the idea is to just reward a lot of these development teams through DoubleZero's subscription revenue, which is recurring revenue versus kind of the one-time revenue model, or one-time grant model that most of these kind of groups get funded through. DoubleZero's revenue is still pretty small at the moment, about $4.36 million annually, but it does account for about 47% of Solana's validator network. So growing quickly, and we can maybe expect to see more from them. The token 2Z is up 1.6% for the week. All right, last up, I'm going to talk about Derive. So last week, decentralized options protocol Derive announced that they're going to be routing 25% of their net fees to buybacks, with the other 75% allocated to their insurance fund. So the project, they kind of reiterated that they don't have a dual equity token structure, which, I've talked about before. It's important because these dual structures lead to a lot of these misaligned incentives. And there's been a lot of struggles we've seen in governance recently. I'm thinking about Aave, where, the people in the for-profit group, such as a labs entity behind the protocol, is benefiting at the expense of the token holders. So the project has been expanding a lot of its focus as of late. They've been branching out and offering better liquidity on their RFQ trades, which is request for quote. So essentially like a big block trade. And then also offering options on hype, which Bitcoin and ETH have historically been like their primary focus. As of today, Derive makes about $4.361 million in annualized revenue, giving it a roughly 40x price to sales on a fully diluted basis. So the Derive token, though, it's up 41% this week. So doing pretty well. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in next Wednesday at 1 p.m. Pacific to hear what's driving token prices.